Is it too late for you to buy gold? Should you be buying more right now? I'm going to answer these questions, but most importantly, I'm going to break down the why behind the answer, because if you don't understand the why, then you won't have the tools to properly protect your savings, your retirement, and your cost of living as we move deeper into the monetary reset that is not only underway, but accelerating. So how do you know for sure if gold is still worth buying? How can you tell if any asset is under or overvalued? And what major forces are shaping the monetary reset that's going to impact your wallet, whether you're ready or not? Let's get into it. The most common reason that people are hesitant to buy gold today is that it feels expensive.
Here in the States and around the globe, the price of gold is going up to record highs.
But expensive and cheap are relative terms, meaning that what feels expensive today might be considered dirt cheap tomorrow. Gold first broke out over $2,000 an ounce in July of 2020 during the pandemic. Now, back then, people thought that that was expensive, and they were kicking themselves for not buying it sooner, thinking that they had missed their opportunity. But fast forward to today, and we're knocking on the door of $3,000 an ounce, and people are saying the exact same thing. But if you're focused on the dollar price, only looking at spot, then you're missing the big picture, because the real question isn't what does gold cost, it's what is gold's value. Globally, we're on the verge of a new commodity supercycle, one that will last decades. Historically, these supercycles last 20 to 30 years on average, but with the perfect storm of deglobalization, resource nationalism, and rising geopolitical conflict, we could see this one last even longer. But this is why smart money is already moving into real assets, and why it's critical for you to understand what is overvalued and what is undervalued today so that you can protect your wealth for tomorrow. So let's take a look. This particular chart shows commodities compared to equities, so real tangible assets compared to the stock market. And I love this chart because if you go back, we can really see it makes sense. So underneath this median line here in the 80s, right, we had equities that were overvalued. But as they lost value, right, in the early 90s, stock market lost about 20% of its value, and suddenly there's a spike in oil prices. Well, you expect to see then the commodities might be overvalued compared to equities. That's anytime there's a peak up here above the red line. But then the opposite happens as we move into here, the early 2000s, late 90s and early 2000s. What happens? Well, that's the dot-com bubble. So obviously equities are seriously overvalued compared to commodities. So that's what we see here. Now, as the dot-com bubble bursts, what happens? There's a sell-off in equities. People realize that they're tremendously overvalued. There's a rush out of equities and into commodities. Same thing here, 2008, 2007, 2008 strikes. What happens? People realize that they need to be in commodities. Now, what's concerning to me is look at where we were down here in the late 90s and early 2000s, right? Where are we today? We are lower than that. We are far lower than the dot-com bubble, meaning that the fallout that we could see today is even more significant. Now, I talk about this all the time, but in the early 2000s with the dot-com bubble, people say, oh, well, obviously the internet revolutionized the world. Yeah, but that doesn't mean that the stock market wasn't overvalued. There were no prior proper tools to understand valuations of these companies. The same thing is happening today in AI. I'm not saying that AI hasn't already revolutionized the world we live in and that it won't continue to, but so many people don't even understand the companies that they're investing in, the technology that they're investing in. And because of that, there's speculation and hype and craze, and it's creating this overvaluation of equities. Meanwhile, trust is breaking down across the world, and people are moving towards something they can trust, something tangible, something real, commodities. But this is just one way of looking at it and thinking about it. There's actually a far more important way of understanding this, and it is gold compared to the mountain of debt that we've created. So let's take a look at that together. Okay, here we go. Gold price and the US debt from 1970 to 2023. And we know today in 2025, the debt is going to be even higher, but let's take a look at this together. We've added $36 trillion of debt. This chart only goes to 31.4, but $36 trillion of debt, and gold has not even kept up close to it. I mean, anytime there's been a revaluation, it has been against gold. This chart doesn't go back to the 1930s, but we know the first time happened with FDR in the 1930s, and then again in the 1970s with Nixon. And here, right here, we can see this spike of gold. This is the free market deciding what gold's price is going to be, right? Well, in theory, as the debt continues to go up, as we continue to create more currency out of thin air, gold should be keeping up with it, but instead it's not. It's not at all, which tells us that the math does not add up. Something is not making sense here, meaning that gold's true fundamental value should be far higher. But this is where I want to flip the script, because people all the time say, so Taylor, what would gold be revalued to? Some are saying 50, 100, 150,000. Of course, it would be about $150,000 an ounce if we were to wipe out the debt. I'm not saying that's what's going to happen, but that's the math. And people say, well, those numbers are crazy. It's outrageous. But no, you know what's crazy and outrageous? The debt. The money printing. That's what's crazy and outrageous. Gold revaluation to six figures isn't crazy and outrageous. It's just the math catching up with reality. I challenge you to think about it that way. But again, don't take my word for it. Look at all of the key factors that are out there that historically have always driven the price of gold. If we look at geopolitical uncertainty, that's not slowing down. If anything, on the economic stage, tensions are only rising, right? We have all of this chaos around tariffs and market volatility. No one knows what's coming next. We have BRICS nations getting stronger as they move away from the dollar at a time when inflation is not going anywhere here in the United States. Might be a recession, might be stagflation. We don't know exactly what's coming next, but the bottom line is it's not good. And all of this is leading central banks to do what? To buy gold. So to answer your question, is it too late to buy gold? No, central banks are buying at a record pace. Should you be buying more? Yes, central banks are absolutely not stopping their gold buying, and there's a reason why. Just like there's a reason why we have tens of millions of ounces of gold flying into New York right now. Why is gold in the mainstream? Because anytime there's been a currency collapse, anytime they have reset the system, they have used gold to do it, and this time will be no different. If you look at the Bank for International Settlements, the BIS, up at the very top, they're the ones who categorize gold as a tier 1 asset. Why would they do that? Why would they do that? They do that because they see the writing on the wall. I talk about dollar collapse all the time as a process, not an event. It's marked by events, different moments where we can look back in time and say that was a pivotal moment, right? Or in the future, there could be pivotal moments where inflation leads to hyperinflation and we see them lop off zeros in a devaluation or revaluation of the currency. Those are pivotal moments, but it's a process. One that is factually underway right now that we all can feel accelerating. So to answer your question again about gold, yes, absolutely. You should be buying more gold. And no, it is not too late to buy gold. The same way people in 2020 were saying, I wish I had bought then. There are going to be people in a couple of years saying, I wish I had bought then, as in right now. So that is my best advice to you. Now, of course, I highly recommend that if you haven't bought gold yet or you want to buy more gold, that you talk to one of our expert analysts. We specialize in gold, silver, and lifelong wealth protection. I say it on here every single day. That's what we do. Our analysts have years of understanding these currency life cycles and have helped people prepare for this exact situation. So if you would like to learn more about how we can help you protect your wealth and prepare for what's coming next, talk to one of our analysts by calling us at the number below. You can scan the QR code, or you can click on the link in the description and set up a Calendly at a time that works best for you. And if you would like to download a free copy of our gold and silver guide, which has a ton of great information in it, we've created it to help people understand these assets and how they can help protect your wealth, then just scan the QR code, or again, click the link in the description below and get your copy today. And as always, I so appreciate you being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.